Welcome to The Explainer. Have you ever watched your favorite altcoin absolutely tank just because Bitcoin sneezed? Or maybe it pumped out of nowhere right after a BTC rally? Yep, we've all been there. Today, we're diving into Bitcoin's gravity, timing altcoin trades. We're going to explore how Bitcoin acts as the literal ocean tide for the entire crypto space, and more importantly, how you can use that massive gravitational pull to your advantage.
There's a great analysis from CoinQuest that really hits the nail on the head. Quote, Bitcoin is the market leader, but altcoins have their own rhythm, influenced by liquidity, hype cycles, and fundamentals, right? Like Bitcoin is undeniably the heavyweight champion, sitting at roughly 58% dominance, but altcoins aren't just mindless clones. They've got their own distinct rhythms. And the smartest traders? They're the ones who know exactly how to decode those rhythms against Bitcoin's baseline.
So, here is our playbook for today. 1. The crypto market hierarchy. 2. The time lag anomaly. 3. Navigating market cycles. 4. Step-by-step trading strategy. And 5. Risk management and psychology. Let's get right into it.
Section 1. The crypto market hierarchy. Bitcoin's dominance. Look, to understand altcoins, you've got to understand the king of the board first. Capital flows through Bitcoin before trickling down to everything else. This brings us to correlation, basically the degree to which altcoin prices mirror Bitcoin's movements or, deviate on their own. Think of it like this. A rising Bitcoin tide lifts all altcoin boats, but the smaller the boat, the more violently it rocks. If BTC prints a massive green weekly candle, the market usually follows and outperforms. If it takes a sudden dip and breaks support, those altcoins take a massive hit.
But here's the kicker. Correlation actually changes depending on market volatility. During strong bull runs, we see high correlation. Altcoins heavily mirror BTC, and their gains are totally amplified. But on the flip side, when things cool off and Bitcoin is just consolidating, trading sideways, we see low correlation. This is where altcoins decouple and start moving independently. And honestly, spotting this low correlation phase is exactly how you find those incredible breakout opportunities.
Section 2. The time lag anomaly. High-frequency evidence.
Now, this is where it gets really interesting. A study in the Asia-Pacific Financial Markets Journal looked at minute-by-minute high-frequency crypto data. They tracked the response time to a BTC price shock. At minute 0, when BTC moves, large caps like Ethereum react almost instantly, also at minute 0. But small caps? They actually experience a measurable delay. They don't react until minute 1 or sometimes even later. So if Bitcoin suddenly dumps, ETH drops immediately. But a lower liquidity token might just float there for 60 seconds before plummeting. That delay is quite literally an arbitrage opportunity.
The researchers pinned this down to a positive correlation coefficient of 0.561 between an asset's trade count and its sensitivity to BTC. Basically, this proves that lower liquidity means fewer trades, which mathematically results in a slower reaction time. The smaller the coin, the slower it wakes up to what Bitcoin just did. And just to be absolutely sure this wasn't some random fluke, they ran Granger causality tests. The verdict? Unidirectional. Bitcoin price moves predict altcoin moves, but not the reverse. Bitcoin leads, altcoins follow. It rigorously confirms that using BTC as your leading indicator isn't just a trader's hunch, it is a mathematically proven strategy.
Section 3. Navigating market cycles. Identifying the season.
So how do these minute-by-minute anomalies play out over weeks and months? Well, it's all about capital rotation across 3 market phases. First, we have Bitcoin season. BTC is the dominant asset, absorbing all of the liquidity, so you want to trade altcoins very cautiously here. Next, profits rotate into Ethereum season. ETH and its ecosystem take over, and you really want to watch for ETH/BTC breakouts. Finally, altcoin season. Bitcoin stops trending and consolidates, smaller caps surge, and that low correlation kicks in. Recognizing these specific seasons tells you exactly where to focus your energy.
Section 4. Step-by-step trading strategy. The playbook.
All right, let's turn that academic data and macro theory into a practical strategy for the charts. Here are your 4 exact steps. Step 1. Always check the BTC trend first to get your directional bias. Step 2. Confirm whether BTC is ranging sideways or actively trending. Step 3. Spot altcoin breakouts or deeper pullbacks. Look for the ones reacting stronger. And Step 4. The absolute golden rule. Enter altcoins only when Bitcoin's direction supports the trade. If an altcoin looks wildly bullish but BTC indicators show it's about to drop, don't take the trade. Bitcoin is your ultimate confirmation.
When you're actually executing these trades, the optimized strategy from the study's machine learning simulations is super asymmetric. you want a lenient, almost zero entry threshold. Basically, be aggressive getting in so you catch that delayed altcoin pump. But on the flip side, use a cautious or negative exit threshold. You want to hold even through slight unrealized losses to avoid getting chopped up by excessive transaction fees. Get in quick, but be careful not to panic exit too early just because of some minor turbulence.
Section 5. Risk Management and Psychology. Protecting Capital.
Because altcoins amplify both gains and losses, sure, they launch in a bull run, but they dump significantly harder in risk-off phases. Protecting your capital is non-negotiable. Let's rapid fire through the rules. First, limit your position sizes. Second, use relative stop losses based on BTC. Meaning, if you're holding an altcoin and Bitcoin suddenly breaks a major support level, you exit the altcoin to reduce exposure. Third, diversify across multiple projects. And fourth, lock in your gains gradually. Altcoin spikes are incredibly sharp and fast. Take profits while the market is handing them to you.
Ultimately, the whole shebang boils down to the psychology of patience. You have to wait for BTC confirmation. It is so tempting to see a random altcoin pumping on Twitter and feel the urge to chase it. But trading an altcoin independently in a total vacuum without checking the Bitcoin ocean tide first, that is a recipe for disaster. Discipline means letting a trade go if Bitcoin isn't giving you the green light.
So I'll leave you with this to think about. Do you trade altcoins independently, or do you always wait for BTC direction first? Let us know. Hopefully, after seeing the high-frequency data today, you're ready to start using Bitcoin's gravity to your advantage. Thanks for joining me on this explainer, and keep learning.